Have you ever wondered how much money you actually need to start trading Forex? A lot of beginners ask this question, and it's a very good one. The truth is, you don't need to be rich to start Forex trading. You can start with a small amount of money, but what's more important than the amount is how you use it, how you manage your risk, and how well you understand the market. Let's break everything down step by step. What is Forex trading really? Before we talk about money, let's quickly remind ourselves what Forex trading is. Forex, short for foreign exchange, is the global market where people buy and sell currencies. For example, if you buy the euro against the US dollar, you are trading the EUR-USD pair. If the euro becomes stronger, you make a profit. If it becomes weaker, you lose. It's that simple, but also that complex. So now the big question is, how much money should you actually start with? Minimum amount to start Forex trading. Let's be real, there's no fixed rule. You can start with as little as $10 or even less on some brokers. But should you start that small? Let's talk about it. If you start with 10 or 20, yes, it's possible to trade, but you won't make big profits. At that level, your goal is not to make money, but to learn. You use that small account to understand how Forex works, how trades move, and how your emotions react when you win or lose. It's like practicing before going into a real match. You build discipline. Recommended starting capital. If you want to trade seriously and see meaningful results, most traders recommend starting with at least $100 to $500. With that range, you can manage your risk better, open trades safely, and actually grow your account slowly without blowing it in one day. Let's take an example. Imagine you start with $200. You risk 1% per trade, which means $2 per trade. That way, even if you lose 10 trades in a row, you only lose 20, not everything. This is how professional traders think. Protect the account first, grow it later. Why risk management matters more than starting amount. A lot of beginners think they need a lot of money to start Forex, but that's not true. What you really need is good risk management. If you don't manage your risk, even $10,000 can disappear in one day. But if you manage your risk well, even $100 can last months and grow over time. That's why the rule most traders follow is, never risk more than 1 to 2% of your account on a single trade. And always use a stop loss to protect yourself. And never trade with money you can't afford to lose. Forex is not a get-rich-quick game. It's a skill that rewards patience and discipline. The power of leverage. Now let's talk about leverage, because it affects how much money you actually need. Leverage means your broker allows you to control a large trade size with a small amount of money. For example, if your broker gives you 1/500 leverage, it means that for every $1 you have, you can control $500 in the market. So if you deposit $100, you can trade as if you had $50,000. Sounds amazing, right? But be careful. Leverage is a double-edged sword. It can multiply your profits, but also your losses. If you don't manage it wisely, you can lose your money very fast. So, if you're a beginner, always start with low leverage, like 1/100 or 1/200 until you gain more experience. The importance of a demo account. Before you use real money, start with a demo account. A demo account lets you trade with fake money but in real market conditions. It's your training ground. You can learn how to open and close trades, set stop losses, and understand how the charts move. Practice until you can grow your demo account steadily for at least 1 or 2 months. Then you can move to a small live account, maybe $50 or $100, to test your emotions in real trading. Can you really make money with small accounts? Yes, you can, but you need to set realistic expectations. If you have a $100 account, don't expect to make $1,000 in a week. That's gambling, not trading. Professional traders aim for 5 to 10% profit per month. So if you have $100 and make $10 profit in a month, that's actually good. Once you can do that consistently, you can grow your account or add more money later. The goal is consistency first, profit second. Example, growing a small account. Let's say you start with $200 and make 10% per month. Month 1, $200, $220. Month 2, $220s, $242. Month 3, $242, $266. After 1 year, if you stay consistent, your account could grow to around $600 or more, all from learning discipline and strategy. Once you master that skill, you can trade with $1,000 or $5,000 and make the same 10%. But now it's $500 profit per month. That's how real traders build income, slowly and smartly. Mistakes beginners make. Let's talk about what not to do. Don't deposit all your money at once. Start small. Don't trade without a stop loss. Don't risk more than 2% per trade. Don't expect to get rich overnight. And don't copy other people's trades blindly. Learn to make your own decisions. Forex rewards knowledge and discipline, not luck. Final advice for beginners. So how much money do you need to start Forex trading? If you just want to learn, start with $10 to $50, or even better, a demo account. If you want to trade seriously, start with $100 to $500. And if you want to earn a side income, you may need $1,000 or more with good strategy and risk control. But remember, it's not about how much you start with. It's about how wisely you trade. Start small, stay consistent, and focus on learning. Because in Forex, education and patience are your real investments, not just your money. If you find this video helpful, don't forget to subscribe and like this video.